After over 7 years of trying to learn trading, I've had my wins and losses, tested hundreds of strategies, and spent hundreds of hours trying to find the best strategy. And after years of learning and perfecting my system, this month I've achieved great results, oscillating around 80% win rate. Using one simple strategy, it is not complicated. You don't have to learn 100 concepts, and the best part is it is simple, and you can do it every day. In this video, I will teach you the only trading strategy you need to consistently make money, and then I will show you examples of trading on charts using the strategy so you can implement it in your trading and become profitable. So after testing hundreds of strategies, I've tested very complicated strategies and I've tested very simple strategies, and every single time, the one thing in honest, the simple strategies for myself perform better, because I could execute them every single time with a couple entry confirmations, whereas with the complicated strategies, sometimes I would enter, and sometimes I wouldn't enter because there was too much noise on the charts. So for myself, especially going into 2025, I want to simplify my trading as much as possible. It is already extremely simple, and this allows me to enter high probability trades every single time. The number one problem that I see 90% of traders have is that they overcomplicate trading. They always think they need to add these new confluences or confirmations just because they saw someone else say it works for them. The reality is it may work for someone else. Beautify your new trader. You want to simplify your trading down its core, and for myself, the strategy I use simplifies trading down to its core, where when I see my entry, all I have to do is enter the trade every single time and let the probability work out. Now, with this being said, I want to ask you a question: which strategy makes more money? Here we can see simple support and resistances. So we have the support down here and we have resistance up here. We can see that every single time that the stock hits this support and resistance, you enter in on the support and you sell the resistance. Now, do you think this strategy makes more money, or do you think this strategy makes more money? Here we can see when high is wing low. And then we have an interest area. You have to break above the swing high, come back, break below the equal low, hold that confirmation entry, and then enter on so you break the previous low for a move to the upside. So in your opinion, out of these set two strategies, which one makes more money? The answer is the question is wrong. It's not about what makes more money. It's which strategy has a simple and repeatable entry model with the examples that is showed you as a new trader, as this may potentially have a higher win rate. However, the amount of entry criteria that you have to look for this entry to actually work is 5 different confirmations, whereas with support and resistance, all you have to look for is a stock come back into support, hold with strong price action, and then your profit target is clear for that resistance. Once the H resistance, you take your profits. Then when it comes back for support, you enter again with strong price confirmation and look for resistance again. So what I want you to notice here is, yes, this may have a higher win rate. However, because of support and resistance is easier to trade, the chances of you entering this trade every single time is significantly higher. And therefore, as a new trader, you most likely will make more money with support and resistance trading than these entry models that have 5 or 6 different confirmations. And this is exactly why with my own trading, I've been trading for 7 years and I still keep it extremely simple. Can I add entry confirmations for a higher win rate? 100%. However, in today's video, I will explain the core strategy or system that allows all of my different setups to work. We'll talk about these types as well, and this is the core strategy that I will use going into 2025 as well. However, I want to make it very clear. If your chart looks like this or anything like this, where you have indicators, Fibonacci volume profile, that it's too much noise, as a new trader, you want to keep your chart as clean as possible. I know, because I've been there. When I was a new trader, I was looking for the holy grail or any indicator that can give me the highest win rate possible. But after 7 years, I can't tell you nothing will give you the holy grail. You need to simplify your trading, then you execute your trades based off your executions, you refine your trading, and that is the fastest way to profitability. So if your chart looks like this, I want to remind you, complication equals sun profitability, and simplification equals profitability. Every single profitable trader I know can explain their strategy within 2 to 3 sentences. If you cannot explain your strategy in 2 to 3 sentences, that means the strategy is complicated, and therefore you need to simplify the strategy for profitability. Now, with the explanation out of the way, let's go look at the profitable entry model that I use every single day, and I will continue to use for years. So to understand the entry model, we need to first understand basic support and resistance. When we see resistance being formed at the top here, and then support being formed on the bottom here, what does this mean? This simply means that buyers are holding the stock to the upside every single time it comes down here, and that sellers are holding the stock to the downside every single time it comes up to this level. Therefore, in this area, sellers are more in control than buyers, and in this area, buyers are more in control than sellers. You have to understand the foundation of basic trading to understand why any strategy works, and the basic foundation of any movement in the stock market comes from one thing: buyers and sellers. So when you know where the buyers and sellers are sitting, you are able to create a strategy that utilizes buyers and sellers to help you achieve the highest win rate. Now, is that, let's say we had that resistance and it broke out. Does that mean that we should enter the stock for a breakout trade to the upside? Because what is happening here, like I explained earlier before, we had sellers sitting up at this resistance. However, if the stock breaks out of the resistance, this means that there are now more buyers than sellers, as buyers are bringing the stock to the upside, and now the buyers have control over the sellers on this previous resistance level. Now, when we understand that, does that mean that we should enter in on the breakout every single time? Because if buyers have control, that means the stock should continue to move to the upside. And this is where my strategy comes in. When you understand sellers are sitting above resistance and buyers are sitting below support, then you understand when we break out of the resistance, buyers have now stepped in. And therefore, this resistance now is turned into an area of support. So when we break out of resistance, their resistance turns into support, and therefore, because this resistance turned into support, buyers want to hold the stock back above this level, because similar to down here when we had support, this resistance is turning into support, and therefore the buyers would want to bring the stock back to the upside. This also helped us for multiple reasons. The number one reason this helps us is our risk to reward. If we're buying breakout trades, we have to risk a little bit more. Why do we have to risk more? Because this could be a potential fake out event. Though buyers stepped in here, we could come all the way back down. Why is that? Because this was a false breakout. So don't want to enter false breakouts. And to combat that, what we want to do is not enter the breakout, but rather wait, because we know the level that buyers need to hold up now is going to be resistance. And therefore, this is going to give us the highest risk to reward. Not only will it give us the highest risk to reward, it will also increase our win rate. The reason it increases our win rate if we dodge it faked out on this breakout than if it comes back west up out of the trade. However, here we're waiting for price action to confirm near this level before we take the entry. And therefore, we're going to increase our win rate and also increase our risk to rewards of the core strategy that it rate is the break and retest. We're waiting for a clear uptrend or a clear downtrend. I am a momentum trader, and therefore when we get the breakout, I'm simply looking for the stock to trace back into the resistance now. Turn support, and I always like to have at least a 2R multiple, meaning for every $100 risk, we must make at least $200 of profit now. Because of this 2R multiple, we don't have to win every single trade. That's the beauty of this strategy. We don't need 100% win rate, 80% win rate, 70% win rate with a 2R multiple to be profitable. Even if we have a win rate of 50 cents, we will still be profitable and consistent. And that's why this strategy alleviates the stress of winning every single trade if you execute it properly now. Now, one thing I do want to mention quickly, because I know some people are going to talk about it in the comments. This is the core system and strategy that it raid, and I will continue to trade in 2025. However, to this strategy, there is multiple setups that you can trade. For example, if you're planning to watch my 5-minute opening range video, the pre-market strategy, or the previous day high and low setup, those are all part of this main system as well. However, at the core of it, this is what it raid, which is the break and retest to effectively trade. All of those are setups, so you need to understand the core, and this is the core. So now that we've talked about the entry model, let's go look at some real examples to really solidify the strategy and make sure you can implement it by the time you're done watching this video. Here we're on the Tesla chart opening up on the day, and I want to show you exactly what I was thinking and how I traded my strategy. So in this Tesla example here, we can see that we have every clear high of day level up here. Now with this high of day level, what else can we see? We can see that we actually had a low on Tesla right there. So Tesla was consolidating right at this level, but then we broke below and came right back up. If you've watched my liquidity video soon, you know that this is actually a sweep of liquidity or fake out liquidity. This simply means that sellers stepped in here looking for that short position, and then breakout short sellers also stepped in trying to hold the stock to the downside. However, buyers stepped in near this area of support and brought it right back up. So now these sellers in this position are trapped into this trade, and this is the exact reason that we don't buy breakouts. This would have been a good break and retest to the downside if we had weak price action, but because we wait for strong price action, we were able to avoid this entry and actually understand that this trade is much more bullish than bearish. Once we understand that, what's the next thing that we have to look for? The next thing we have to look for is a low risk entry. So we have high of day up here. So what is our next entry? Well, to actually confirm that the stock does want to move to the upside, we have to break above this previous pivot levels. We have to break above 238.09, shows some strong displacement, retest this level with strong price action. If you don't know how to read price action, I have a full in-depth video coming soon right after this one. And then we're essentially looking for high of day and at least a 2R multiples. So this is the exact setup that I would be looking for. Like I said, it's extremely simple. You see strength, you need to confirm that it's an uptrend, and then we're simply looking for their test high of day with at least a 2R multiple. So for myself, when I saw this entry, I entered into Tesla. I had my stop loss simply at a break below that previous candlestick, and then my profit target needed to be at least a 2R multiple. In this example, the 2 multiple came a little bit above high of day. However, as you saw in my actual executions, my exits were actually much further. Where were my exits? Well, for myself in this trade, my exits actually came at the previous high of day. So this is the previous high of day level, and that's where I scaled the majority of my trade after high of day. And this trade actually ended up with 8.2 risk to reward trade. This means on this trade, if you were risking $100, you would have made $820. So this was the first trade using the break and retest. Of course, I took this trade live in real time. Thanks for watching this video on the break and retest strategy. One of the most reliable setups in day trading when used with discipline and patience. If you found value in this content, don't forget to leave a like, subscribe to the channel, and drop a comment below with your thoughts or questions. I respond to as many as I can. Make sure to visit the channel again for more trading strategies, setups, and tips designed to help you level up your trading skills. Also, head over to www.tradingtour.net to grab your free trading ebooks and deepen your knowledge even further. And remember, the knowledge contained on this channel is for educational purposes only and does not constitute investment advice. Remember that investing involves risk, and you make any investment decisions at your own risk. See you in the next day trading lesson.